next week. So does this damage confidence in the Australian market in any way, even if you're looking at big picture when you're looking at foreign investors in the local market?
Nadine, today's event really highlights the benefits of having two exchanges. So when one does have a technical glitch and goes down, a trading can occur through the other exchange. But of course today was single stock options, warrants, as well as futures expiration. So for anyone wanting to get out of short positions this morning, they would have been quite disadvantaged, because by the time they moved back into the market, the futures market had already moved up by 1.7%, and we ended up closing the day up by 2.5%. It was also a huge day in terms of news flow, both macro news coming out of Europe as well as domestically. Here we saw one of the big four banks recording its biggest profit ever, and we did see NAB coming out with its full year profit result. A number of other companies also releasing their full year results, so investors unable to react to that news. Of course, Europe was the big one, while we saw the rest of the world responding to those plans coming out of Europe with a risk rally. Australian investors were stuck on the ASX. We had to wait 4 hours before we could put any trades on, and by then most risk assets had already moved. In fact, if we have a look at the euro versus the US dollar, we've seen a huge hike in that, and this is intraday trade today. You can see that we've just bounced off the 140 level. The Aussie dollar versus the US currency, a very impressive performance today, able to crack the 105 cent level. At the moment it's trading at 105.2 US cents. So the risk rally was on. Unfortunately, Australian share investors missing out on the first part of that risk rally when the news hit the market.
The Woolworths result?
We've seen switching between Woolworths and Wesfarmers for a while now. In fact, in the last 3 months, we've seen Woolworths shares down by 11% and Wesfarmers shares up by 6%. And of course, the key driver of this is the food and liquor division. If we have a look at food and liquor for Woolworths today, on a comparable basis, only up by 1.9%. And if you compare that to Wesfarmers, well, we saw a comparable basis sales increasing by 5.2%. So you can see yet once again, Wesfarmers sales in that food and liquor division, which is the key driver of prices, really outperforming, and investors continuing to switch out of Woolworths and into Wesfarmers. We've seen this trend over the last 9 months based on the food and liquor division for Wesfarmers outperforming Woolworths result, and we've continued to see that today.
David, NAB performance, we did see revenues weaker than expected. We also had Cameron Klein, CEO, really warning of some tough times perhaps ahead in 2012. What do you make of it?
If we have a look at NAB, where they really outperform is their retail bank and business banking. And in their retail space, we have seen that breakup campaign being great for business, taking away some market share from the other big four. And in terms of business banking, we saw earnings up by 11.5%, so outperforming there. I guess the weakness in this result comes from New Zealand as well as the UK, so that was a drag. But in looking at this stock, you have to have a look at the catalyst for how NAB might outperform the rest of the big four banks. And in that, I guess one of the things that could be a catalyst for outperformance is if they were to offload their UK operations, then we could see their PE ratio coming in line more with their peers. Also, if you have a look at NAB, they're a little bit fatter than, say, Westpac's of the world. Westpac has a very lean income to cost ratio. So if we do see a low credit environment, we are going to see a much bigger emphasis on cost cutting, and that's where NAB could outperform once again as well. But I guess one of the things to be watching in terms of NAB, it is going to tap the funding markets in the next 2 weeks. We did see Cameron Klein saying in volatile markets, funding does tend to be more expensive. So I guess that's one thing that investors are going to keep a close eye on.
And